It is 9:26 a.m. Pacific Daylight Time. It is the day after Easter 2025. This is episode 1078 of Bitcoin, and the Pope is dead. In case you hadn't heard that by now, Pope Francis passed away, I guess they're saying on Easter Day. I call hooey. I'm sorry, I do. I think that he died several days ago, and they were just keeping him, in stasis so they could announce it on Easter. And honestly, if I was the Catholic Church as the Holy See, or the people overseeing the Holy See in the Pope's absence, honestly, I would have done the same. Francis, definitely not my favorite Pope. I mean, I'm not Catholic, so I don't really have that much of a dog in that hunt. But if you say, who was your favorite Pope? Well, it certainly wasn't the Pope before this one. The guy that resigned. He's the only, the second Pope in history, or at least in known history, that has ever resigned. And I can't remember his name. This is that German dude. I didn't like him at all. In fact, I straight up called him anti-Pope. And a lot of people are calling Francis an anti-Pope himself. But again, no real dog in the hunt. But I got to say, Pope John Paul II, there was just something about that guy. There was something about the expressions on his face. There was just something about him. I'm sure there's several people out there that can find all manner of fault with John Paul II. However, God, I really do wish he was back. So the question becomes, what Pope is the conclave going to announce this time? And I'm sure that they are calling the conclave into action. I'll bet you the bishops are already on planes, or however they get over to the Vatican, and they will be literally locked into a room until they come up with a vote that gives us a new Pope. Heaven only knows when that will actually be, but it's always sad to see somebody die. The guy died of double pneumonia. And if you've ever had pneumonia in just one lung, you know how bad that is. I've actually had pneumonia when I was a kid. I had double pneumonia. It's a test. It's a test of humanity. I will give it that. And, I'm sorry that he died. Even if he wasn't my favorite Pope, it's just too bad to see an old, an 88-year-old man die of, God, double pneumonia. It's got to be painful. All right. So let's get into the week of Bitcoin news, where Spar supermarkets in Switzerland is starting to accept Bitcoin, albeit it seems to be in just one store. It looks like a pilot program. Vivek Sen Bitcoin from Bitcoin Magazine might be able to shed some light on it. Spar has begun accepting Bitcoin payments at its Zug, Switzerland location, marking another milestone in Switzerland's progressive approach to Bitcoin adoption, and the implementation uses the Lightning Network through DFX Swiss's Open Crypto Pay solution, enabling instant transactions at the point of sale. Okay, so Lightning Network is definitely on deck for use in Switzerland. This should be interesting, because if you remember, there were several times, especially in 2015, 2014, even though I was into Bitcoin late summer of 2015, I had already known about Roger Ver, and he had been going around trying to get a whole bunch of merchants to adopt Bitcoin, but at the time, it was all on chain. And then the Lightning Network came out. Roger Ver's attempts at getting any kind of traction on merchant adoption was almost nil. It just didn't really take off. Nobody's going to wait 10 minutes to see if your transaction actually went through. I mean, that's why Bitcoin is, in my opinion, at the base layer, is more about final settlement than it is paying for coffee. And that's a well-worn meme right there. It's like, oh my God, but coffee with Bitcoin. But when Lightning Network came out, things changed because that one was instant, albeit not exactly final settlement. And that was one of the arguments that Roger Ver made against the Lightning Network. And the second argument that he made was that it doesn't work. He tried to use it a couple of times and it just failed on him. Well, he started using it around the same time that we all started using it. And yeah, Lightning Network had some issues. There wasn't a lot of Lightning Network nodes that were online, for one thing. That causes, the way these networks work, that causes problems. But he was using the no merchant adoption and the Lightning Network not actually working as his main points to launch the Bitcoin Cash network, which is completely failed, and then by itself got split off by, oh God, what was it? What's his name? Oh God, Craig Wright and his friend Calvin Ayre. They totally rugged Roger. I think it was, they had associated with Roger on the BCH fork, and then 1 year later, they forked it again into BSV and completely left Roger out in the wind to twist. It was a kind of a thing of beauty. But getting back to this, the store's location in Zug, often called Crypto Valley, reflects Switzerland's embrace of the technology. The country has emerged as a global leader in Bitcoin adoption, with cities like Zug and Lugano spearheading initiatives to integrate Bitcoin into everyday transactions. And Lugano, in particular, has made headlines with its Plan B initiative, which aims to make Bitcoin a de facto legal tender in the city. The plan, supported by Mayor Michel Folletti, has already enabled Bitcoin payments for taxes and public services and at hundreds of local merchants. The city has also partnered with Tether, of course, to establish a technology education center and startup fund. Quote, "This SPAR location is among the first supermarkets in Switzerland where you can pay directly at the checkout using Bitcoin via an LNURL, DFX Swiss announced, and the implementation could pave the way for expansion across SPAR's network of, holy moly, 13,900 stores in 48 countries, which serves approximately 14.7 million customers a day." Bitcoin Association Switzerland Director Rahim Tagzagdigan demonstrated the system's simplicity. Quote, "Just scan a static QR code, send sats, immediate and easy registration by the cashier," end quote. This user-friendly approach aligns with Switzerland's vision of making Bitcoin transactions accessible to everyday consumers. The country's Bitcoin-friendly stance has attracted numerous Bitcoin and crypto companies and initiatives. Beyond Zug and Lugano, cities across Switzerland are exploring similar programs supported by a robust banking sector that increasingly is embracing Bitcoin. SPAR's initiative builds on this foundation, joining other Swiss retailers and businesses in accepting Bitcoin payments. The move could influence adoption across the retail sector, particularly given Switzerland's role as a model for Bitcoin integration in traditional finance and commerce. So my question, that's the end of the article, but my question is, will it work this time? And if I say anything other than yes, I'm going to be crucified. And I don't think it's going to work this time either. And it's not that it's not that I'm saying anything bad itself about Bitcoin. We all know where this is going. When I say we're, I mean the people of the planet. We're still infused with the logic of fiat. And you're talking about a tiger changing its spots. It's really, really hard to do that. It's like teaching an old dog new tricks. This has nothing to do with whether or not Bitcoin, whether or not it's plugged into Lightning Network or eCash or any of that. It's not whether or not it works, whether or not it's easier now than it used to be, and whether or not it's going to get even easier in the future. That has nothing to do with it. Roger was wrong in trying to get merchant adoption, not because Bitcoin didn't work, but because he was up against human psychology. And that psychology is molded in the times that they live in, right? The psychology of all people isn't something you're just born with and it doesn't change. Your psychology is like clay. And all of us, me included, and everybody else I know, we're all molded by media, bullshit stories coming out of the media, events that happen across the globe, whether they're reported correctly by media or incorrectly by media or correctly by independent media, as we are now starting to find out. These guys are much better at it because they're more honest. We get shaped every day by the events and the people and their opinions are shaped by all the events around them. And it's just this pool of where we are. And where we are is firmly in two things: a bullshit fiat system where money is just continuously debased, and yet we're told that's good because inflation is good for the economy, even though there's no basis in truth for that. But because a Nobel laureate, commentator on CNBC says it, well, then it must be true because you're not on TV. Well, that's an appeal to an authority, which is one of the basic logical fallacies that you can fall into. And the entire world is operating on a logical fallacy. If it's not on CNBC, if it's not said by Jim Cramer, if it's not said by, I don't know, Rachel Maddow, then it can't be true. Nobody else has the authority to be able to tell you what to do. So we're continuously bathed in the light of fiat. And until that light is extinguished, and I hope it's done with a Howitzer 105, it's going to be this way. And it's going to continuously be difficult, no matter how easy it is, how easy we make it to interact with and do business in Bitcoin. We're not fighting against that technology. We're not fighting against whether or not Bitcoin works or not. We're fighting ourselves. And we're also fighting the UN, who comes out with reports like this. Illegal crypto mining is a powerful tool for cybercrime syndicates. Vismaya V, writing this one for Decrypt, the United Nations once again has sounded the alarm on a new phase of global organized crime, where crypto mines hum in militia-run factories. Stablecoins helps wash billions, and Telegram, well, they just host black markets. A new report from the United Nations Office of Drugs and Crime reveals that transnational criminal groups from East and Southeast Asia are rapidly expanding their operations worldwide using illegal crypto mining as a powerful tool to launder billions in illicit proceeds. The report titled, quote, Inflection Point, the global implications of scam centers, underground banking, and illicit online marketplaces in Southeast Asia, documents how these syndicates are embedding themselves in regions with weak oversight, from Zambia and Nigeria to Tonga and the Middle East. The groups are diversifying beyond scams and trafficking, building full-fledged online ecosystems that incorporate unlicensed, crypto exchanges. And for the love of Mary, encrypted messaging tools. And the holy grail of it all, stablecoin, to power an industrial-scale fraud machine. The report's authors said, actually, they call it fraud economy. But fraud machine is, I think, a better way to actually describe what they're lying about here. Quote, we are seeing a global expansion of East and Southeast Asian organized crime groups, says Benedict Hoffman, UNODC, acting regional representative. Quote, it spreads like a cancer. Authorities treat it in one area, but the roots, they never disappear. They simply migrate. End quote. Are you suggesting? Never mind. I was about to launch into something else. Don't worry about it. The report pointed to Huan Guarantee, recently rebranded Hawang, as one of the central hubs of this black underground economy. With over 970,000 users and $24 billion in crypto flows since 2021, this Cambodia-based platform has reportedly become a one-stop shop for laundering tools, fake identities, and scam services, many now offered on Telegram as enforcement pressure grows. The platform has also launched its own stablecoin called Blockchain, crypto exchange, and online gambling products designed to circumvent government controls, the report's authors said. The convergence between the acceleration and professionalization of these operations on the one hand, and their geographical expansion into new parts of the region and beyond on the other, translates into a new intensity in the industry, one that governments need to be prepared to respond to, Hoffman said. Some Huan vendors now target jurisdictions like Nigeria, Namibia, and Angola, showing the platform's widening global footprint. Crypto mining is especially valuable to these groups because it largely avoids anti-money laundering oversight, says the UNDOC, by stealing electricity and operating off-grid. Oh, okay, hold on. How can you steal electricity but not be on the grid? Are you hooking up to like your neighbor's gasoline generator? Do you see how much bullshit this is? By stealing electricity and operating off-grid, gangs can generate seemingly clean digital assets at minimal cost and with little traceability. In regions like Libya, where electricity costs are among the lowest in the world, these operations have even caused citywide blackouts, according to Libyan officials cited in the report. The recent findings build on warnings first outlined in a 2024 UNODC report, which highlighted the increasing convergence of crypto, cybercrime, and AI in Southeast Asia. That report warned that organized crime groups were exploiting vulnerabilities across the region, with their operations quickly outpacing government's ability to respond. In 2023 alone, Americans lost $5.6 billion to crypto-related scams, with $4.4 billion attributed to, quote, pig butchering schemes traced back to Southeast Asia. Meanwhile, East and Southeast Asian nations reported an estimated $37 billion in cyber fraud losses, most of it routed through crypto-based laundering tools, the latest report said. Decrypt reached out to UNODC for additional comment and will update this story if a response is ever received. In March, Thailand authorities uncovered 63 illegal crypto mining machines operating out of an abandoned building in Pathum Thane province. The operation, remotely controlled, resulted in electricity theft exceeding $300,000. In neighboring Malaysia, a house explosion in February led authorities to a covert mining setup, just one of many uncovered in that country's ongoing crackdown. Meanwhile, Iran experienced rolling blackouts in Tehran and other provinces in late 2024 with suspicions that unauthorized crypto mining was contributing to the strain on the power grid. Well, wait a minute, I thought these guys were operating off-grid. Anyway, to address the issue, the UN has called for urgent multilateral action, including the need to, quote, monitor and investigate threats like crypto-enabled fraud, strengthen legal frameworks for asset recovery and investigation, and enable cross-border coordination through timely information exchange. It sounds like your Interpol to me. Okay, this is a FUD piece out of the UN because they got nothing better to do and they're scared shitless. Actually, probably that they do have better things to do, but they have actually been directed to write this. This is ridiculous. The crypto mining itself isn't really going to do a whole lot if you're stealing other people's crypto. I mean, unless it can be proven that the transactions that were involved in said fraud or said theft were not being mined by any other pool. And we're talking like I'm just talking about Bitcoin right now because Bitcoin, Litecoin, maybe Dogecoin, I think are the only things left that actually use proof of work where you need electricity powered mining machines to actually do transactions. Okay. So unless we can actually prove that all the transactions, or at least a good guts and feathers of these transactions that were involved in these frauds were refused by any of the pools, and the only way that they could get mined is through these particular mining facilities that were clearly stealing electricity somehow in an off-grid situation, which I'm just going to harp on because the ludicrousness of that statement leads me to believe that the rest of this report is complete bullshit. There's no way that you can steal electricity in the amounts needed to do functional mining and be off-grid. The only way that you can do that is if you're going to be off-grid, you got to find a power source all of your own, whether it's you've got a hydroelectric generator, or you're somehow or another on a gas well or something. But if you're off-grid, the chances of you getting enough electricity to steal it that is noticeable by authorities is infinitesimal. There's no way you can do that. And that pretty much, as far as I'm concerned, breaks that entire report right in half. So do not listen to anything that the UN says. They're being directed pretty much, by people above them saying we've got to do everything we can to continuously shed the light that crypto is bad because we can't control it. That's what this all boils down to. And if you feel dirty, about listening to that, try SoapMiner's handmade tallow soaps. The Circle P is open for business. It's where I bring plebs with goods and services to plebs just like you who might want to actually, purchase those goods and services in a circular Bitcoin economy. That's right. And you can get cedarwood tallow soaps. You can get peppermint tallow soap. You can get lavender. You can get pine tar, or you can get unflavored or, unscented. Like the rough cut tallow's got 3 ingredients: 100% beef tallow, it's got lye, it's got distilled water. And SoapMiner on his website, which is SoapMiner.com, that's SoapMiner.com. That's a hell of a grab for a URL, dude. I mean, I just realized that he's got SoapMiner.com. Not net, not, IO, not nothing, SoapMiner.com. Like nobody figured out SoapMiner? I don't know, man. That's pretty good. But on his website, SoapMiner.com, he will take Bitcoin, and there's a place in the notes where you can leave a note. If you decide to try out his soaps and buy a couple of bars, make sure you tell him that you heard about it here on the Circle P on the Bitcoin and podcast, and maybe, just maybe, SoapMiner will cut me a few Satoshis, clean, laundered Satoshis, because, soap mining. I'll bet he's off grid and stealing electricity. Good for you, brother. Now on to the $10 trillion giant in the room. Charles Schwab is launching a spot Bitcoin trading by 2026. According to Bitcoin News and Alex Larry, financial investment giant Charles Schwab has announced plans to offer spot Bitcoin trading to its clients within the next 12 months. This is a big move into the digital asset space by a company with over $10 trillion in assets under management. Rick Wurster, who became CEO of Charles Schwab in 2025, confirmed the plans during several recent public appearances, including the 2025 Spring Business Update and various media interviews. Wurster said, quote, "We are hopefully and likely to be able to launch direct spot crypto. Our goal is to do that in the next 12 months, and we're on a great path to be able to do that," end quote. If approved, Schwab's new offering would allow millions of its clients to buy and sell digital assets like Bitcoin through their brokerage accounts. This is retail. This is Joe on the street. Charles Schwab is not the institution where billionaires go. This is you and me. Hey man, I got a Charles Schwab account. I can buy Vanguard through Charles Schwab. Yeah, see that's why it's huge. But Charles Schwab currently does offer Bitcoin ETFs and futures, but not direct trading of digital assets. The move into spot Bitcoin trading puts Schwab in direct competition with platforms like Coinbase and Robinhood, which already allow users to trade digital assets. It also signals a bigger trend of traditional financial firms embracing digital assets as mainstream investments. Worster said the company is being driven by customer demand. Quote, visits to our crypto content have gone up 400%, and 70% of those visitors are not yet Schwab clients. So we think we can attract a lot of new users, he said, adding, quote, as people in the industry are thinking about crypto, they'd love to work with a trusted brand and a firm that can bring them a lot of capabilities, and we are that firm, end quote. One of the main reasons Charles Schwab has not offered direct Bitcoin trading before is regulatory uncertainty in the United States. Previous CEO Walt Bettinger said the lack of clarity was a major obstacle. But with Donald Trump reelected, Schwab executives now think the regulatory environment is getting clearer. Worster said that he expects better digital asset rules to come out under this administration, and it will be easier for companies like Schwab to launch these services. As Schwab gets into the spot Bitcoin market, many in the community are watching how this will affect prices. And right now, Bitcoin is around $87,000, and analysts are predicting a move to $100,000. Technicals show Bitcoin is consolidating at key levels, and if the momentum continues, it could break out. Schwab's $10 trillion in assets under management gives it the confidence to actively get into the spot Bitcoin markets, a shift from just holding passive ETFs to a more deep involvement. Some think Schwab's entry will have an impact similar to BlackRock and Fidelity launching Bitcoin ETFs in early 2024. If Schwab does launch spot Bitcoin trading as planned, it will unlock a lot of liquidity and attract both retail and institutional investors to the platform and to the broader market. Yeah, Schwab, they have some some institutional traction, but that's not their bread and butter, dude. Their bread and butter is just Joe Blow on the street. Sally Sue eating the sandwich. The teachers, the firemen, the cops. The regular people that have regular jobs that aren't billionaires or even millionaires. That's the bread and butter of Charles Schwab. And once Schwab does this, if they do, if they turn it on, then that's going to be the last light switch to flick on for the rest of the retail industry. They're all going to go, shit, we got to do it now. And yeah, there will probably be a whole host of chicanery that goes on. And yes, there will be crying and the gnashing of teeth and the baring of claws because, oh my God, Bitcoin's so manipulated by the institutions. I can't say Bitcoin is for enemies any more than I already have. If you have a solution that is going to allow us to force these institutions to not do the thing, and the thing is buy Bitcoin, then you're advocating for the very thing that would allow me not to buy Bitcoin. And we can't have that. I mean, you can't have everything perfect. At one point or another, you just got to take the lumps. And there may be some other weird issues along the way. And Arthur Hayes points out something that, well, I haven't really been thinking about it, but I do think a lot about U.S. Treasuries. Arthur seems to be thinking about U.S. Treasuries in a slightly different way. Zoltan Vardai from Cointelegraph says Bitcoin rally above $100,000 may follow United States Treasury buybacks. This is according again to Arthur Hayes. Investors seeking Bitcoin exposure may be running out of time to purchase below a six-figure price, as U.S. Treasury buybacks may signal the next leg up for the world's first cryptocurrency. This might be the, quote, last chance to buy Bitcoin below the $100,000 mark, according to Arthur Hayes, co-founder of BitMEX and chief investment officer over at Maelstrom. Quote, seriously, fam, this might be the last chance you have to buy BTC post, hinting at incoming treasury buybacks as the bazooka for Bitcoin's price trajectory. Okay, those first two sentences where it's like, this may be your last chance. Dude, it's hype. Okay, and I'm not saying that we won't get there. We probably will. We've seen 100,000 before. But when we start using sentences and telling normies, hey, this is your last chance below, I don't know, X amount of dollars, please don't do that. It's not helpful. But that's not the reason why I'm bringing you this story in the first place. It is not to hype you up. It is not to get you all salivating so that you go out and mortgage your house for the 5th time to go all in on Bitcoin. That's not why I'm reading this. This is about this treasury buyback that Arthur Hayes is talking about. So maybe, just maybe, Arthur will get into it here. Treasury buybacks refer to the United States Treasury Department repurchasing its outstanding bonds from the open markets to increase liquidity, manage federal debt, or stabilize interest rates. These operations can inject liquidity into the financial system, often benefiting risk assets like Bitcoin. Other analysts predict that the growth of the fiat money supply will be Bitcoin's main catalyst this year, 2025. The growing money supply, M2, may push Bitcoin's price above 132,000 before the end of the year, according to Jamie Coots, chief crypto analyst at Real Vision. However, global trade war concerns may limit investor appetite until the U.S. and China reach a trade agreement. Bitcoin briefly rose above 87,700 for the first time in nearly 3 weeks since U.S. President Donald Trump announced reciprocal import tariffs on April the 2nd. Quote, looks like Bitcoin is pumping on continued dollar weakness, wrote Andrei Dragosh, the European head of research at Bitwise, adding that the U.S. dollar index just touched the lowest level since March of 2022. The weakening of the U.S. dollar may reinforce Bitcoin's appeal as a safe haven asset, Ryan Lee, chief analyst at BitGet Research, told Cointelegraph, adding, quote, strong volume and technical confirmation from a descending wedge breakout suggests a potential test of the $90,000 resistance, with macro factors like a weakening dollar and rising gold correlation reinforcing Bitcoin's appeal as a hedge, end quote. Despite the recent correction, Japanese and UK-based investment firms are investing hundreds of millions of dollars into Bitcoin, signaling continued institutional adoption that may accelerate Bitcoin's 4-year cycle. All right, so when they say Japanese and UK-based investment firms are investing hundreds of millions into Bitcoin, one of them is referencing a UK investment firm buying $250 million worth of Bitcoin, apparently right before the Easter weekend. And in Japan, Cointelegraph is referencing the Metaplanet surpasses 400 million Bitcoin holdings. Well, Metaplanet, just because it started out as a Japanese company, I don't know, man. Its CEO is definitely not Japanese, but hey, it is what it is. But that's what they're referring to. Now, getting back to this buyback of U.S. Treasury bonds, who's fighting who right now in U.S. government? And that would be Trump and Powell. They are fully engaged in a flat-out, very public, very nasty battle. Trump wants to simply fire Powell. He's asked the Supreme Court to see if he has the authority to do so. I don't think he does. Powell is refusing to budge on interest rates, even though the market is signaling, dude, we really want lower interest rates. But Powell wants to be like, was it Volcker? Volcker. I think he was the Federal Reserve chair under Reagan. He's the guy that cranked up the interest rates to like 20%. And I mean, he got everything back on track, but man, it really hurt a lot of people. It hurt a whole bunch of people. So we've got a very public, very nasty battle going on. And if the Treasury, if the only way that they can inject liquidity back into the system is by buying their own bonds, they're basically going to be monetizing the debt that they printed, which means that they're going to take potential money in the form of a Treasury bond that they printed. They printed it out of thin air, and they're basically going to make it kinetic by exchanging it for money, which they will actually have to print. It's just, who knows what's actually going to happen. You just hold on tight, ladies and gentlemen. Meanwhile, we will run the numbers. Futures and commodities, oil getting wrecked, down 2 2/3 of a point to 62.97. Brent North Sea likewise getting slaughtered, 2.8% to the downside to $66.01 on a barrel. Natural gas might as well have taken it up the Aztec pyramid and pulled its heart out as a human sacrifice. 5.12% to the downside. Gasoline is down almost 2 points to $2.05 a gallon. Gold rallies again, 3% to the upside. New all-time high at $3,425.60. Silver is up a half point to $32.62. Platinum is down a row of sticks, 111. Copper is down 0.16%. Palladium is down almost 3 full points. Ag not looking all that good. Biggest winner today is chocolate, 2.5% to the upside. Biggest loser is coffee, 2.6% to the downside. Meanwhile, live cattle crawling sideways. Lean hogs down 1/3 of a point. Feeder cattle also down 1/3 of a point. And here comes the equities indices, the measurement of the fiat legacy financial system. The Dow getting clobbered, 2.79%. S&P, ass being handed to it, 2.88% to the downside. The NASDAQ getting its hat handed to it, it's 3% to the downside. And the S&P mini, pretty much chugging along, 2.77% to the downside. It's a bloodbath out there. And yet Bitcoin is at $86,700. That puts us to a $1.72 trillion market cap. We can get 25.2 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,854,141.51 of. And average fees per block are slightly higher than normal, 0.05 BTC taken in fees on a per block basis. Let me just say something about what gold is doing against Bitcoin. 25 ounces of gold per Bitcoin has been relatively stable. They're both going up together. It's kind of like, now, this isn't long term. This is clearly on the short term play, but gold and Bitcoin are basically riding this in tandem. All the confusion, anybody, like all the people that are saying, oh my God, it's chaos out there. Yeah, well, Bitcoin and gold seem to be riding that wave at the same time. They're kind of holding hands, which brings me to, Peter Schiff. And he's still just basically shitting on Bitcoin. And you know what Bitcoin, like I see a bunch of Bitcoiners, and you know what they're doing? They're actually congratulating Peter Schiff. I mean, they're being really polite to him, and they're being very nice to him. And they're like, hey, we've been doing this. Honestly, we've been doing this for a while. We've been trying to get Peter Schiff to understand that we essentially believe the exact same things that you do, Pete, but we also like Bitcoin. But he is just he's non-relenting. He is recalcitrant. He hates Bitcoin. He's always going to hate Bitcoin. There's just no reconciliation with that guy. Okay, so as I said, fees are a little bit higher than normal, but there's also more blocks in the mempools around the world than normal. In fact, there's like there's like 12, 13 blocks now. Wow, 25,000 unconfirmed transactions. waiting to clear at high priority rates of 6 Satoshis per VByte. Low priority is going to get you in at 4. Hash rate has dropped, and in a relatively precipitous fashion, yet nothing that I'm concerned about. 859 exahashes per second. Friday, I believe it was well above 900 exahashes per second. So we have seen, I won't say it's not minor capitulation, but we have seen a good amount of hash work come off the network. And from Bitcoin Ann's Friday episode, Base Debased, I've got these. Now, I'm doing this a little bit different. I'm going to be reading these boosts just a little bit differently. I'm trying out Helipad, their boost tracker, which is running on my Start9 node, and it's connected directly to my Lightning node, which is the ones that receive all of my boosts and streaming Satoshis. And I got 500 sats from Lupin. Says, looks like poor Judd is dead. Thanks again for your work. Happy Easter to you and your family, and to yours too, sir. 3,222 sats from Dubrovko says, the boost to make up for your node not getting one previously. And I guess he's talking about the 3,231 sat boost that he gave me right before that. And it says, your last boost didn't go to your Red Raider node, silly goose. No notes, but I will take your thoughts and prayers. I have some challenges, but per Dave Ramsey, I am doing better than I deserve. Dubrovko, I do hope that whatever it is you're going through, you come out the other side. 1,021 sats from Axelrod Double Aught says, Axelrod rules. 1,000 from Bubba saying, according to Adam, I'm glad I'll be dead in 20 years or too fucking old to care. Quantum versus pencil and paper. Who wins in history? I don't know. Whoever gets to write it, whoever writes the history is clearly is the winner. 586 sats from Psyduck says Psyduck, and 3,333 from Wartime says Good Friday indeed. 585 from Psyduck says Psyduck. Oh no, that's from Crowd Healths. That's from a different episode. Okay, so those are all the boosts that I got from Base Debased, and I put a filter on it this time. And I'm not trying to be a dick. I'm just saying I wanted to try to see if this Helipad, it's got some features on it. So I said, okay, I only want to see everything above 500 Satoshis. Seems to have worked. So if you guys, for whatever reason, have are getting your own boosts from your, like if you have a, Zap Stream, you can boost people over there. If you have your own podcast and you're podcasting 2.0 enabled, you might want to give Helipad a try. It's really easy to install on a Start9, Helipad, Helipad. Give it a try. That's the weather report. It is part 2 of the news you can use. Bitcoiner Plan B slams ETH. Centralized and pre-mined shitcoin. Adrian Zemunsky gives us a laugh from Cointelegraph. If you guys remember Plan B, he's the guy that came up with the stock to flow model that kind of everybody, started laughing at him when it failed. I honestly don't know why everybody laughs at somebody when their model doesn't, meet up with reality. All models are broken. All of them. There's not a single model inside or outside of Bitcoin that actually works all the time. So please stop bagging on Plan B for having a model that kind of broke a couple of years ago. It's not that big of a deal. But pseudonymous Bitcoin stock to flow model creator Plan B attacked Ethereum and mocked the project's co-founder Vitalik Buterin. Oh, he mocked him. Plan B, mockingly reposted a June 2022 Twitter post by Buterin in which the Ethereum co-founder said the stock to flow is really not looking good now. Plan B responded with a new post stating, Ethereum is really not looking good now. And if you've seen the chart of Ethereum versus BTC, you know what he's talking about. In his response to Buterin's criticism from years ago, Plan B claimed Ethereum and the network's coin Ether are centralized and pre-mined, pointing to its shift to proof of stake and changes in its issuance rate, he said that those features are harmful and deserve all the mockery they get, echoing Buterein's old comment about stock to flow. In a separate Twitter post, Plan B explained that an Ethereum full node requires 9 terabytes of disk space, meaning he cannot run it on his hardware. The kind of node in question is probably an Ethereum archival node, which according to Etherscan data requires over 21.8 terabytes with a Geth client. Yeah, I remember those days. An Ethereum full node running the Geth client that prunes older states with the default setting requires 1.28 terabytes, according to Etherscan data. The Bitcoin and Ethereum communities have long debated what constitutes a, quote, full node. This type of prune node cannot access the full historical data or generate Merkle proofs for old blocks, which limits its research and bug-finding applications. Still, such nodes can engage in full trustless block and transaction validation. Bitcoin's full nodes require under 700 gigabytes, according to Statista data, and also require much less compute power. Well, this means that users can run Bitcoin full nodes much more easily, leading to a higher node count and higher network decentralization. Not everyone views the criticism as founded. Jeremiah O'Connor, Chief Technology Officer and co-founder at crypto cyber security firm TrueGuard. Sorry, I read it as turgid, but no, never mind. He says, quote, Plan B's take is classic Bitcoin maxi energy, loud, confident, and missing half the picture, end quote. O'Connor explained that Ethereum and Bitcoin serve two different purposes. No, they don't. He said that Ethereum nodes are bigger and more complex since Ether isn't just digital gold, but it's a full-on global computer. Quote, of course it's heavier, end quote. Oh my God, they're still going with the world computer narrative. I can't believe they're doing that. I mean, honestly, that's the first time I've heard world computer narrative out of any Etherhead's, mouth in a couple of years now, honestly. But he conceded that users relying on centralized data providers like Infura is a problem. Still, he claimed that every ecosystem engages in centralization trade-offs and that the Ethereum developers are working to address the issue, and it's evolving fast. Dude, you guys have said you've been working on that shit for 5 years. Stop. Quote, calling ETH a shitcoin because it's not Bitcoin is like calling smartphones a scam because they aren't landlines. He added that the two are different tools with differing purposes. He views Bitcoin as a rock-solid value storage and Ethereum as where the builders are, and said that both matter and both complement each other, end quote. Plan B also questioned Buterein's influence on Ethereum's development, calling him a single point of failure. However, Ethereum Foundation co-executive director Tamaz Stanstachek recently announced that Buterin is stepping back from day-to-day operations to focus on, research. Plan B also raised an issue with Ethereum rolling back transactions following the 2016 DAO hack. Quote, the fact that this is even possible should worry you, end quote. Yeah, it should. Bybit CEO Ben Zhao suggested an Ethereum rollback following the exchange's $1.4 billion hack. Still, many in the community argued that a rollback happening now, with Ethereum being a more mature network, would be next to impossible. Bitcoin itself had a comparable incident in its early history as well. On August the 15th, 2010, an exploit resulted in a transaction that mined 184 Bitcoin on the network in block 74,638. God, that was a long time ago. Satoshi Nakamoto, still involved in development at the time, and other core devs released an update that indeed rolled back the network to block 74,637 and patched the vulnerability. In other words, Bitcoin saw its own blockchain rollback in its early days. Other points raised by Plan B include Ethereum switching to proof of stake, or POS, which he claims has consequences for the price. He suggested that changes to issuance and governance undermine Ethereum's value proposition compared to Bitcoin's fixed and predictable supply. Yes, it is true that the Bitcoin network did have its own rollback. And if we were to say, okay, well, Ethereum had its rollback, Bitcoin had its rollback, let's just cancel those out. All right, one for one. There's only been one on each chain. So let's say that all bets are off on that thing, and we just let those two things collide and they cancel each other out like dark matter and regular matter annihilating each other, right? All right, or antimatter and matter annihilating each other. Plan B still has a point. And that point is the fact that they have switched their monetary policy on Ethereum so many times that you don't really know what's going to happen next. What they've demonstrated is that it's whatever they want to do. Whereas Bitcoin pretty much stays stable all the time. We have never changed monetary policy. We have never changed the security model. Nothing about the protocol has ever changed except for the addition of things that don't disrupt those people that were interacting with the network before those changes occurred. Which means that somebody who got into a coma in 2009 and still had a Bitcoin wallet that had one Bitcoin on it would be able to interact with the network today. Although their wallet probably sucks, because back in the early day, the Bitcoin Core wallet, which is all you had available, was awful. It doesn't mean that you'd lose your money. It was just a really bad user experience. It was really technical, and you really had to know what you were doing. Otherwise, you very well could lose that particular Bitcoin. But the upgrade to SegWit and Taproot and all that does not preclude that person being able to interact with today's network. And we've never changed security, and we've never changed issuance, and we've never changed the cap. We haven't ever changed anything, and Ethereum just changes shit all day long. So even if you go, well, Bitcoin had its rollback, yeah, but everything else has stayed the same. The only thing that Ethereum does is change their monetary policy on a whim. That is not what I want to be invested in. I want to be invested in what Michael Saylor's invested in, because they bought another $555 million worth of Bitcoin and have increased their total stash to 538,200 Bitcoin, according to Francisco Rodriguez from CoinDesk. MicroStrategy has added 6,556 Bitcoin to its balance sheet, and they spent $555.8 million in the process. The purchase was funded using proceeds from the company's two at-the-market stock offering programs, the filing notes. The firm, which holds the most amount of Bitcoin, sold 1.76 million shares of its Class A common stock and over 91,000 shares of a preferred stock series called STRK between April 14th and April 20th. That's their strike stock offering. The common stock sale brought in $547 million, while the preferred shares added another 7.8. The latest acquisition boosts Strategy's total holdings to 538,200 Bitcoin, purchased at an average price of $67,766 per coin. So what's the most important thing here? Is the most important thing here that MicroStrategy bought more Bitcoin? No, not really. Not really. What's most important here is that the firm sold 1.76 million shares of Class A common stock. That's the stock they've always had. And people are buying MicroStrategy or strategy stock hand over fist. It's not the special strike. It's not the special other one called Strife. No. This is just a regular, available, Joe on the street, common stock stuff. And there's still massive amounts of demand for it. And I hear the people, out there on Twitter and whatnot saying this is going to end badly and all that kind of stuff. But again, I have to remind everybody dude, you cannot stop MicroStrategy or Strategy from buying Bitcoin. If you could, then you could stop me from buying Bitcoin, and then we actually have a problem. What will be the end game for Strategy and all this Bitcoin? Nobody knows. Hell, not even Michael Saylor probably knows. He might think he's got a plan, but everybody's got a battle plan until you meet on the field of battle and get punched in the face. Things could change for Michael Saylor dramatically. I don't know. I mean, a plane could fall out of the sky and sever both of his legs, and he all of a sudden has a come to Jesus moment and sells all his Bitcoin. Who knows? Nobody knows what the hell he's going to do. I mean, he says he's going to keep it forever. I don't know. The BlackRock stuff, it's the same way, man. You can't stop them from buying Bitcoin. You can't stop them from having customers. I mean, at what point do we just have to sit there and say, I can't do anything about it? I can only control that which is in my influence. I have no influence, and neither do you, over Michael Saylor. So it's, to me, when I see people crying about Misty, this MSTY thing all day, I'm like, you cry all you want. It is not going to change perception in the market. It is a waste of time. Stop crying about it. Because even Metaplanet is buying Bitcoin. And they've topped $400 million worth of Bitcoin holdings with their brand new $28 million purchase. Zoltan Vardai is writing for Cointelegraph. Japanese investment firm Metaplanet increased its Bitcoin holdings to more than $400 million after its latest purchase of 330 Bitcoin bought at $28.2 million at an average price of $85,605 per Bitcoin, bringing its total holdings to 4,855 Bitcoin, which is worth $414 million, according to an April 21st post from Simon Gurovich, the CEO of Metaplanet. And that's all we really need to know about that one, honestly. So the last one up today is BitGet. Speaking of rollbacks, is going to roll back trades and compensate users after abnormal voxel trading activity. Are we going to talk about a shitcoin, David? Yes, we are. And not because I'm interested in voxel at all. I couldn't care less. It's the fact that we have a whole set of trades that are going to be rolled back. And remember, we were talking about the rollbacks of the Bitcoin and Ethereum chains. Well, this isn't even the voxel chain rolling something back. This seems to me like it's the exchange itself saying, no. That was all fake. And this is just to demonstrate, stop playing in this casino. It's going to do things to you that you don't want to be done to you. It's going to torture you until you say uncle, and then it's going to torture you some more because it is a conniving, evil, backstabbing, karma-crushing piece of garbage that you need to stay away from. Stop gambling your money at centralized cryptocurrency exchange BitGet, because it's going to roll back trades and compensate users after abnormal trading activity in its perpetual futures market affected a little-known token, sending volume soaring to levels higher than that of Bitcoin. I've never even heard of voxel before. I haven't heard of most of these before. But voxel trading at volumes above Bitcoin? Are you kidding? Well, early Sunday morning, traders in BitGet's perpetual futures market for voxel, the native token of Polygon-based RPG game Voxy Tactics, suddenly faced a surge of volume as the token rose in value. Voxel is the 723rd largest cryptocurrency by market capitalization, according to CoinMarketCap, and the token was up over 300% in the past week. One Twitter user reportedly logged a six-figure profit from an investment of under $100. Quote, BitGet probably has a bug in its market-making robot, they said. Yet, with BitGet planning to roll back all trades in the market, the users' profiles or profits are likely to evaporate. Well, how? If you didn't take your voxel off of that exchange and send it to another exchange, then yes, you can. But if you follow the directions that we all say, and I don't care if it's Bitcoin or a shitcoin, you cannot keep your shit on the exchange because shit like this will happen to you. Quote, upon investigation, certain accounts were found to have potentially engaged in market manipulation, triggering our risk control system. To ensure a fair and secure trading environment, BitGet will now initiate a rollback of irregular trades within 24 hours. For users who incurred losses during this period, a compensation plan will be offered, end quote. The BitGet spokesperson said on Twitter that the exchange is still investigating the incident and will provide an update within 24 hours. Voxy Tactics could not be immediately reached for comment. Okay, so the guys that lost money are going to be compensated. What about the guys that made money? And I think there's going to be two flavors of those people that made money. The people that directly manipulated the market, clearly. But I'll bet you there were some people that were sitting there watching these markets, because there are people that do this, that sit there and they just look at graphs all day long, and they've probably got some kind of automated process to throw out alarms and whatnot like that. And they probably made out like bandits and were not part of the actual market manipulation itself. They were just saying, hey, this thing's going up. They throw a whole bunch of money into it, and then boom, 6-figure profit. Okay. Do they have to give the money back? Because that was never said in the statement from BitGet. So this is why it's so very, very important for you guys to not trade in the casino. It's not good for your health. It's not good for your physical health or mental health, and it's not good for those that depend on you. Stop gambling. Get some help. I'm serious. If you've got a gambling addiction, you need to stop it now. This is not the time to be addicted to gambling. And I'm not talking about Voxel. I ain't talking about BitGet. Hell, I'm not even talking about Bitcoin at this point. I'm talking about straight up flying to Vegas and being unable to stop gambling while the markets, both cryptocurrency related and fiat legacy markets, are on fire. And I'm really talking about the fiat legacy markets being on fire. Nobody knows what to do in this environment. Nobody knows what to buy. Housing right now is really shaky. Man, I saw a house that my wife actually found this house in a place that we both love to go in Southwest Colorado. And it was like right in the same village of the house that we already have. And she's like, what about, look at this. And I'm looking at this house, and it's 6 bedrooms, 4 bathrooms. It's on a 1/4 acre of land right off the highway that has maybe, 1 car an hour come down it. It's really quiet. It's in the San Juan Mountains. It's absolutely freaking gorgeous. Others than like the bedrooms having cheap wood paneling in it that would literally need to be taken down immediately and replaced with something else like, paint. This thing was going for $480,000. The owners have been trying to sell it since 2023. It's had 3 failed sales runs. And I can tell because I got a hold of the MLS sheet from our realtor that lives up there. And she's over that, like that entire valley. All the homes she has, like she can get pull all the MLS data on them because she's a real estate agent. So she sends me this thing, and I'm looking at its sales history, and it's been owned by the same family for like decades. And in 2023, they tried to sell it for right at $600,000. And this is a nice looking house. It's not a mansion. It's not a log cabin. It's not something that like a millionaire is going to build or buy, but it's a nice house. And they were trying to unload it for $600,000, failed. Then they dropped the price the next year to like $580,000. It failed and both of these times this thing was on the market for a year. They finally came in and put it back on the market for like a 3rd time, or maybe even a 4th time, for $480,000. I haven't seen it sell yet. But when I look at the map, if I take that price and I go over to Zillow and I look at the pricing map in that valley, that's the lowest price house there, and it's 6 bedrooms, 4 bathrooms. It's got a shed outside, and I mean a nice looking shed, something you could like either have it like as a little art place for like, you know, like for your wife or your husband, or like a small recording studio for a podcast, or just a little by yourself reading room shack. It's really nice. And I'm looking at the other prices around this valley, and they're $587,000, $600,000, $750,000. It's ridiculous. It's utterly ridiculous. These guys were undercutting the market since 2023 on their prices, and they still could not unload this house. And what does that tell me? It tells me people still believe that the value they think they have in their house, because Zillow tells them that, is not the value they actually possess in that house. Maybe they're thinking they're going to refi it and get some cash out. Good luck. Good luck. Nobody knows what this market's going to do, whether it's real estate, equities, treasury, it does not matter. Nobody knows what to do. This is not the time to extend or become addicted to a gambling habit. I am begging you, if you are somebody listening to my voice and you're somebody who can say that you have a bookie, don't ever call the bookie again. We're going to have to ride this shit out, and we can all do it together, and I hope that I see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.